To the loan officer training series with the mortgage calculator. Thank you for tuning in nice and early. Today we're going to be talking about ethical lending practices. So a nice ethics training here today. We put the chat up on the screen, so feel free to drop comments there in the chat as you tune in. We'll get started here in just a moment. Great topic here today. Kind of goes hand in hand with yesterday of preventing mortgage fraud. So a little housekeeping type stuff this week, but definitely things that you need to know that can not only make you be a better loan officer, but of course keep you out of trouble. So we'll get started here in just a moment. And not only can you drop comments there in the chat, but also you can drop questions if you have them as we go through the training here today. So it looks like we're live on all the different platforms, so we can go ahead and get it started. Keep dropping comments, drop any questions you have in the chat, but we'll go ahead and take the chat off the screen for now, and we will get into it. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and I'm joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. Today, we are going to be talking about ethical lending practices. So we do these trainings 7 p.m. Eastern time every Tuesday and Wednesday with a different topic for loan officers. And today is our ethics training. So our sales manager, Jose, with 28 years of experience as a loan officer and a realtor, is going to break some ethics down to us. So Jose, if you're ready, let's go ahead and talk about it.
All right, how's everybody doing tonight? Thank you for joining us for tonight's training, which could be part two, the inverse, right? Yesterday we were talking about fraud, right? Mortgage fraud and all of the repercussions, and ethics, or following ethical behavior and understanding what it is, the implications, ramifications, goes hand in hand with obviously not being a fraudulent MLO, right? Fraud is a symptom of the disease, but the disease is, I would call it, unethical behavior. A lot to consider here in this. I mean, this is this should be the intertwining thread in everybody's career, whatever you do, but especially in mortgage loan origination for many reasons beyond the obvious, right? The obvious being that lending is a highly regulated profession and highly regulated environment. So, should you deviate from the ethical path? I mean, they had to put that in there because, unfortunately, in the last business cycle for lending, where we had the issues prior to 2008, the resulting reaction from that by government and regulators was the Dodd Frank Act, right? The Dodd Frank Act basically repositioned lending, made it a lot more transparent. Prior to the Dodd Frank Act, you can make par plus and you can make upfront money. After the Dodd Frank Act, everything has to be totally disclosed, eliminated all of those unethical opportunities to bump up the rate on a borrower so you could make more money so that you could keep the par plus. Nowadays, when that happens, the borrower gets the money as a lender credit. Anything that's above the par rate goes to them, right? Just one of the examples, and one of the really good things that the Dodd Frank Act did. I'm not saying I agree with everything of the Dodd Frank Act. Some regulations are just knee jerk overreactions, but overall, Dodd Frank Act very good in transparency, which, as you will see, is one of our ethical considerations. So let me get into it so that I can expand on our slides. I don't have a lot of slides today, but each slide does have a lot of information that we're going to get into, right? So as you can see, our topic tonight, ethical lending practices. promoting ethical lending practices to build trust, ensure compliance, and avoid legal issues. All very important stuff when you are a licensee, right? Without our license, we cannot do business. That's unless you are working in a bank. Then you work under the bank's license. So, first, let's talk a little bit about what is ethical lending, what is ethics, right? I'm going to talk first. I found this nice definition there, which I find very, very powerful, right? I mean, this is so powerful. It's very deep. It's ethics is knowing the difference between what you have a right or the power to do and what is the right thing to do. I mean, think about that one a second as a licensee, right? That's very important consideration. I always mention that when I'm doing the trainings to the newbies, and we always have to remind them, remember, we are the licensee, right? We are one step above the public. They're not licensed. We are. So, in our having the license, it's to be assumed that we know what to do, right? We know how to do our job. We know about regulations, right? What we can do and cannot do on a regulatory stance, right? Those are things that involve ethics because you are continually going to be faced with forks in the road, right? Do you make a left? Do you make a right? Do you take the blue pill? Do you take the red pill, right? Those are all considerations that could result in repercussions, both positive or negative, on the situation, depending on the path that you choose. Because we have a lot of power, but with that power comes a lot of responsibility, and the regulators do not look kindly to MLOs that violate those duties, like your fiduciary responsibility that you have with a borrower. So we always talk about that always in our trainings, because not knowing what to do is not an excuse for having messed up. I mean, it's one thing if you didn't know how to do a calculation, a simple mistake, but when we're talking about these decisions that can have very deep repercussions because you chose to take the easy route on a loan, for example, and the route that you chose was not the correct route for the borrower, and the reason that you chose it was because it was easier or because you made more money. That's a total violation of your fiduciary responsibility with a customer. So the reasons that you take actions when you are a loan officer have to be based in taking into consideration what is in the best interest for the customer to meet their objective in an ethical manner. That is the whole purpose that the Dodd-Frank Act came about, like I was just mentioning, and it forced us to be more ethical because they saw that it was basically, a lot of people were being influenced by the money that they were making and the ability to make more money if they could just tweak some things, usually not in the favor of the customer, and not let the customer know and not give the customer the options to decide, right? So, very important there on the difference between knowing what you have a right to do and what is the right thing to do. So, what are some ethical lending components? Well, to be transparent and honest, right? We're just alluding to that when we're talking about the Dodd-Frank Act. Dodd-Frank Act forced us to be transparent, or more transparent than we were being, or than some people were being. Treat customers fairly and with respect. Provide clear, understandable information. Now, I sometimes wonder about that with the LEs and all these things that came about with TRID, but that is the goal here, right? Provide clear, understandable information. Treat your clients professionally and in a courteous manner. Always very important. And a very important one. This is why we always say, safeguard the borrower's personal private information, right? Treat borrower information as confidential and in accordance with data protection legislation. That's very important. So don't be going out around there emailing applications that are not encrypted, emailing credit reports that are not encrypted, and emailing any other type of documentation that has customer information that's private and personal like that, that is not encrypted. Um, that is why we always encourage using the CRM to obtain all of the documentation from the borrower. Don't be lazy and just have the borrower email you the stuff, and don't let them be lazy. Explain to them up front and empower them and educate them on the dangers of emailing their bank statements, their W-2s, tax returns, all this kind of information in an unencrypted manner, because in the end, if anything happens with theft of that information, you are probably going to be complicit, or they're going to definitely say you're complicit in that because they were sending it to you, and they're going to say that you told them to send it to you. And if that's the case, you're going to have an issue. That's why we provide you with all of this great technology and software that we provide to you at no additional charge, so that you can do things in a compliant, safe manner, and so that you can explain to the customer why you're doing it and toot your horn. Hey, look at how I'm looking out for you. You have to take every opportunity possible in the transaction to let the customer know how you are always looking to go above and beyond for them, right? Because it's all about them. We can be the best, or at least think we're the best. We can have the best products. We can think we have the best of everything, but if we have no customers, we have nothing, right? So the customer is essential. Um, to success, and we have to respect their needs, and we have to respect their privacy, and you're going to see in a second why it would behoove you to do that as well. So what are the issues that you want to avoid by following ethical lending practices? I mean, some of these are pretty obvious, but we're going to state them and expand a little bit on them, right? So, first and foremost, we're looking at regulatory investigations, fines, license suspension, and even license revocation. And let me tell you, if you lose one professional license, you're going to lose every other professional license that you have as soon as those other professional licenses find out that one license has been revoked. So, those of you that are real estate agents out there, if you lose your lending license, there's a good probability the next time around when you go to renew your real estate license, they're going to realize what happened and they're not going to renew your license. If you have a stockbroker license or life insurance license or any other license, the same thing. If your license was revoked for unethical practices, that's a big no-no. So you're going to have issues. But these regulatory investigations, fines, suspensions, and revocations can be caused by misrepresentation of information, right? You specifically lied to the customer just to get them to sign because that was the easy way to do it rather than show them the reasons why with the data that's there. You want to cite guidelines. I'm not going to tell you to send them a copy of the guidelines because we don't send anybody guidelines, but you can certainly discuss the guidelines with the customer, explain to them clearly the program, give them options for the program. That's why when the customer reaches out, for example, for a DSCR loan, and this goes into my next topic, so let me cover the next bullet points and then I'll go into the anecdote, right? But steering the borrower into a loan program because it is easier is a big problem. Steering a borrower into a loan program because it is more profitable is a big problem, right? That's all those are predatory lending, meaning you're taking advantage of an unlicensed individual, you, the licensee, who has more knowledge, who has more power. Remember, you don't want to be tyrannical here. You have that knowledge and that power to do good, not to try to be basically a predator just to make your money, right? So when that customer reaches out to you, even if it's a DSCR loan, for example, that doesn't mean that a DSCR loan is the only loan type that you're going to discuss with them. You're going to discuss with them other options that may be available for what they're trying to do so that you can confirm what is the best path, right? So they may have clicked on that DSCR ad because it was cool, right? We have great ads. They want to know what that DSCR thing is all about. That's great. I just did one right now where it's an 80% bank statement purchase. Customer clicked on the DSCR ad, right? DSCR probably would have been a little easier, even though in the end the property didn't cash flow where he needed to at an 80%. But still, that's not the reason why I discussed it. I discussed with the borrower bank statement. I discussed with the borrower full doc. Why? Because the law says that you have to offer the customer the lowest cost option. If you did not offer the lowest cost option, and a regulator happens to select your file, your closed file for just a quick review to make sure everything was in the up and up, and all of a sudden they see that there were tax returns in the file with the borrower making $150,000 a year, self-employed borrower, right? So it may have been a mission for you to do the self-employed uh, income calculation, right? Maybe that's why you picked the SCR. It's the easy button. But if the regulator sees there was tax returns in there stating that, showing that they could have qualified full doc, and they see that you did not offer full doc as an option, and they see that you have nothing in your conversation log in the file. That's why it's so important to keep notes of the conversation log at different plateaus of the loan, because you want to show the process of the loan as it evolved. In case anyone looks, they can judge your actions. If the conversation log is totally blank, which unfortunately is the case uh, more than 50% of the time. I'm not going to say it's the case all of the time, but I think that, and I'm not talking about our team, but just in general, I think a lot of MLOs don't realize that the conversation log can protect you if anything should happen, right? Because you're going to be documenting conversations that you had with the customer. You're going to, then we can hopefully see email threads to the customer, text communication with the customer to show that you gave the customer options and that the customer told you, no, Jose, you know what? I don't want to do it. I don't care because I just don't want to deal with it. I mean, obviously, if you told them your interest rate is going to be lower and you're going to save $5,000 and they still said no, then you better write, hey, you better reply, I just want to double check and confirm that even though you're going to pay $5,000 more in closing fee, you're going to pay a 2% higher interest rate, you really want to go against my recommendation. You really want to go with the DSCR. I don't know. I wouldn't be able to figure that one out if that actually happened. But if that was the case, and you got a documentation, you're protected. However, if the file doesn't speak anything towards that, and all we see is a DSCR loan where they should have gone full doc, you're going to have a problem because it's going to view that you steered that borrower into that loan program that was not in their best interest. They didn't know, you didn't offer it to them, and your lack of knowing, also called ignorance, but I don't want to say ignorance per se because that's usually viewed as a negative, phrase. But ignorance just means the lack of knowledge in a certain topic or a certain situation. Your ignorance of the subject matter is not going to protect you, right? It's when it gets down to it, they're gonna say, wait a minute, you got the license, and the license means you have to know, right? So keep in mind, in the end, it's you, the MLO, signing that application. It's you, the MLO, that's going to be on the hook. It's you, the MLO, that's going to feel terrible about it after the fact. So why go through all of this negative stuff that's going to happen to your life when it's so easy to do the right thing and to just know what you're doing? And the good thing is that we have a lot of ways that if you don't know what you're doing, you can collaborate, right? We have a referral option where you can refer your deal to a teammate, still stay involved in the deal, still make money, right? And meet the objective of the customer, right? The fact that you need the money and you don't want to refer the deal to somebody to work it together with you is not an excuse. If you mess up the deal, you're going to be the one with the regulatory investigation, the fines, license suspension, and potential license revocation, simply because you needed the money and you didn't want to reach out and share the deal with somebody else. And I really want that to sink really deeply into everyone that's listening out there, especially our lesser experienced people, and realize that. And also realize something I always love to say: 100% of nothing is still nothing. Because there's a good probability that in that deal where you don't really know what you're doing, but you didn't seek out assistance, or seek out to collaborate with somebody to split the deal and work it together with them, there's a good probability you're going to mess up the deal, you're going to make no money, and then potentially have a customer, if for example it's a purchase contract, and now they may lose their deposit because you didn't close the deal on time because you spent 3 weeks just trying to figure it out, and now you got 1 week to try to close it. You're going to be in trouble there. You're going to have no money from that deal, and you're going to be having the regulators looking at you with a magnifying glass and going through your actions with a fine-tooth comb. So this is so important, so critical to jumpstarting your career and getting off on a good foot. Because just imagine, when you start collaborating with people, you're going to learn. You're going to earn while you learn, right? So just, please, we give you the opportunities, take advantage of them. So, what other issues can you face besides, losing your license and license suspension and fines, right? Well, damaged reputation resulting in a loss of business and lower revenue. Damaged reputation both for the company that you're licensed with, because unfortunately, anything like that you do is going to drag everybody through the gutter, right? We're all going to be scarred by your bad actions. So, we definitely don't want that. So that's why we try to look out and take proactive measures when we see somebody starting to struggle on a deal. It's not because we don't want you to make money. It's because of everything that you see here that we're trying to avoid, right? Legal action from clients, right? Lawsuits, an unsustainable MLO career, because if you have your license revoked, you're not going to have a MLO career anymore, nor any other professional licensed career. But assuming you don't get it revoked, assuming you don't get it suspended, you're not going to have a very sustainable career, because nobody's going to want to work with you, especially when times get tough And like right now, rates are dropping, so we're going to get a little bit more breadth in the activity. But right now, the activity is really concentrated more in with the MLOs that provide value, because in this environment, clients are looking for MLOs that know what they're doing, that can add value. This goes back to everything that we always try to repeat in all our training about being a loan consultant, right? Being a loan consultant, ethics is probably the top thing in being a good loan consultant, is following ethical business practices, because everything that is related to ethical business practices is going to make you an amazing mortgage loan officer, because there's no way you're not going to be amazing if you just follow the steps, and obviously do your training right, and reach out for collaboration and know your resources, all very important things. And then obviously, last but not least on this checklist of issues to avoid, compliance violations internally within the company, right? A lot of companies have compliance standards, right, that you must follow. And if you deviate from that path, you get warnings. And if you further deviate from that path, you get terminated, right? And now all of a sudden you can't get a referral from the company that terminated you. And that happens, right? You go now apply somewhere else, and the new company sends a note, to the company that terminated you. Hey, John Doe just applied for us to be a mortgage loan officer. How was he? Well, you know, refer that one to the compliance manager and have them answer that one, because we definitely are not going to give you a 5-star review. We can't bury you. We're not going to bury you, but we cannot give you say that he was an exemplary employee, and anything other than that. When somebody is seeking a reference, especially in the highly regulated lending industry, if you don't get 5-star review from the company that you just left, at least having to do with your ethics, there's a good probability that if this company you're trying to get hired by is worth anything, they're probably not going to want to bring you on board. You're probably going to have to be relegated to working for the bottom feeders of the industry, with people that are also unethical, and that it's a downward spiral, unsustainable, unsatisfying career where you're just making a commission. And I'll tell you what, after 28 years in this business that I am in, I've never had an ethics complaint. I've never had a complaint against my license, neither my real estate license nor my mortgage license. I always go out of my way to make sure that the customer is taken care of, and I let them know that. And that brings me referrals, and that makes me happy, because just getting the commission gets very boring after a while. You need to have some purpose in your life to make it fun, to do this kind of job, because this kind of job can be a roller coaster ride if you let it suck you in like that, and you have to get satisfaction. And the biggest satisfaction that I get is by being ethical and feeling very proud that I am one of the people that is an integral part of building society, right? We put people in homes, right? We help them get the money so they can buy the home and get their shelter. And those of you that have had some psychology course knows Maslow's hierarchy of needs. At the bottom of that hierarchy of needs, at the bottom of that pyramid, is shelter, right? And we are the ones that help society obtain those goals. We're dream makers. So understand that happens by being ethical. Now, what are the benefits of ethical lending, right? Now we get to the fun part, right? I can't highlight and emphasize any more than I do sustainable MLO career, right? And I speak from experience, because you're not going to do it 28 years and still have some hair on your head unless you were treating people right and not having to look over your shoulder and losing sleep at night because everybody's chasing you down. That's very like crazy. You're gonna forget everybody you lied to. They're gonna catch you. It's not worth it. So, benefits of ethical lending and how does it result in a sustainable MLO career, which is what we all want, right? And sustainable is synonymous also for successful, profitable, right? Happiness, all things that are gonna increase the longevity of your life as well, right? You're not gonna like burn out your liver because you're unhappy. Uh, Differentiating yourself from the competition that is only focused on profit, right? That's one of the benefits of having ethical lending practices is you're not just looking at the bottom line, right? It's an ethical way to get there, and you can be very profitable by being ethical, more profitable by being ethical than by being a scammer. I can guarantee you that. So that's definitely going to differentiate you from the competition. And I was just mentioning on right now why the business is concentrated in less originators out there, because the ones that differentiated themselves from the competition are the ones getting all the business. That's just the way it is, you know. Increased referral business, as customers will be delighted with your service and products offered, right? It's not just service as an excuse to shove an 11% rate down your throat when you could have gotten a 7.5% rate if I would have just analyzed those self-employed borrower tax returns, uncovered the hidden opportunities there for you, and shown you how you could save money by doing my job. Simply by that, by doing my job. So that's why I say with your service and products offered, because you're going to be offering the correct products for the borrower. That's critical to sustainability. And obviously, your career is going to be sustainable because you're going to be able to keep your license or licenses, including any other professional licenses you may have or are considering getting, right? Especially, real estate license, like I mentioned, goes hand in hand with the loan license. You can be a double dipper as long as you disclose the fact. Then it's all ethical, right? As long as they know, hey, I'm your realtor, I'm your loan officer, I'm going to make money on both, and it's disclosed in writing, everybody's good, everybody's happy. The customers, believe me, they're going to want you to make as much money as you can if you treat them right, as long as you're not making it off of their hide. And what I mean off of their hide is by cheating them, right? As long as you're making it because you're smart and you took all the opportunities that were given to you to get the licenses and handle them appropriately and disclose and make the commission as the realtor and make the commission as a loan officer. That's there's nothing wrong with that. Customers love it. I mean, a lot of most of the time when I have a closing and it's local, the customer is taking me to lunch or taking me to dinner because they feel like, man, Jose worked so hard, he looked out for my interest so much, he didn't make enough money. So I got to take him to dinner and buy and give him a little gift and all this kind of stuff they do, and I appreciate it. And then they keep appreciating it by sending you referrals, right? What's another benefit of ethical lending now? You're going to be a productive member of society. Remember I was talking about Maslow's hierarchy of needs, right? We are the builders of society here. If nobody had a home, right? I mean, where would society be? Right? It'd be totally different than what it is, right? Your home is your castle. It makes you feel good. It gives you a sense of accomplishment. So, you're going to be a productive member of society with a heightened awareness of social needs and the greater good. If everybody's pushing in the same direction towards, the greater good and taking into consideration other people's needs and society, and we need to do that as a lender. Hey, there's nothing can be bad about that. Now, here's where we're gonna, split hairs a little bit, but this is something you may not consider, but this is really true. You're gonna attract higher quality employees and loan officers. Why? Because you have that amazing reputation as a company with a heart that's successful, right? People think that to be successful, you have to be ruthless. No, you don't have to be ruthless. You just have to be prepared. That's a Boy Scout motto, by the way. Be prepared, right? You got to be prepared and know what you're doing and just follow all of these tenets that we have been mentioning. So definitely, um, employees, loan officers look at that when they're researching the company who they're planning to work for, especially now more than ever. They're looking at companies that care about people, right? They don't want to work for a heartless company because they think, heck, if they don't care about their customers, are they going to care about their employees and their loan officers, So I mean, it goes hand in hand. Reduce the chance of legal action against you individually and against the company. Again, components. We don't want to be thinking about claims against our errors and emissions policy. And then all of a sudden, your E&O policy goes up by 10 times in costs, and all these things that could happen. And that could be a nightmare. Much more enjoyable and satisfying career. Again, I was touching on that earlier, especially the longer you're in this career. This is a career. This is not something to come in and say, oh man, let me go get my license and go do loans because the interest rates are going down and there's gonna be good opportunities here. No, man, you're in this for the long haul, right? Up and down cycles. If you're in a good position where you're solid in your business practices, a down cycle is not going to affect you that much because that is the moment when you're going to be getting more referrals. That is the moment when there's going to be a consolidation of business in less people. Maybe the same amount of business overall, but less people are going to get it. And they're going to be making money hand over foot while you're going to be going to like sell used cars or something like that because I can't do any loans. Let me go back to selling used cars, and then all of a sudden you see the rates go down. Oh, let me get my license again, and then heck with the used cars. No, man. Once a used car mentality, always a used car mentality. I'm sorry, you can't get in that rut. And last but not least, and this is the one that's the most probably the most one of the most important ones to me, especially as I'm, getting up, in the age that I'm getting. I'm not that I'm that old, but I'm 28 years in the business. I didn't start when I was 1 year old. So is establish lifelong relationships with colleagues and clients that will improve your quality of life. It'll improve your quality of life emotionally, your quality of life financially as well. I mean, I just did the fifth transaction with a customer that I recently closed about a month and a half ago. I did the first transaction with him about 23 years ago. Was about a $180,000 purchase, right? Did his loan then at that time because I've been a double dipper since the beginning. When I got into the business, I came in with both licenses. Uh, but the one that I just did with him recently was a $2 million purchase, and I was the real estate agent on that one. And it was a $1.6 million loan. I was the loan originator on that one as well. I sold him the house that he's now going to sell. So he's given it to us to sell. I sold him that house and did the loan on that one like 3 years ago. But that would not have none of this would have happened. And you can do the math. The real estate pays 3%, and the loan pays what we get paid. 200 bips. By the way, that's what we get paid here. If you're a senior at the mortgage calculator, those of you out there listening and want to join the team, so you can do the math. 2% of 1.6 million and 3% of 2 million is a good amount of money. And I thanked him profusely, and then he took me and my wife to dinner. after we made all the money, took us to dinner because they were just so happy. But we did a great deal for him, great financing, great real estate deal, negotiated a $350,000 price reduction when the appraisal came in lower, didn't try to shove it down his throat and tell him what a good deal it was at the higher price. Just take it, you have the money, simply because I was I was desperate for the money. It was a big paycheck. No, everything has to be done ethically, right? And due to the fact that it was done ethically, it worked out. Everything worked out. We were able, it took 3 weeks to negotiate the price reduction, but it happened. But it was done in a transparent manner with the seller and the seller's agent with me. I mean, I know that's real estate, not lending, but it's related to what we're talking about here with ethics and about how establishing those lifelong relationships with clients and colleagues is going to improve your quality of life. Because, my quality of life is much better when I'm getting those kind of paychecks. I can be much happier. I'm going to eat much healthier, if I have money than if I don't have money. And you will have money if you are ethical, and you will probably not have money if you're not ethical, because eventually you're going to get burned. It's as simple as that. I mean, it's black and white. If you're unethical, eventually you're going to get burned. You're going to lose your license. If you're ethical, people will notice, and you will excel, and you will have a long, satisfying career.
All right. I don't see any questions here. No, I don't see anything. Great topic, though, here for today. And again, it kind of goes hand in hand with yesterday. If you didn't watch yesterday, make sure to go back on our YouTube channel and watch it for the preventing fraud. And then this is the ethics one, which is absolutely amazing. And I love that last example there, Jose. That is a pretty serious transaction with some serious money that's been cultivating for many years of you doing great business and being, above the board, ethical, having the borrower's best interests at all times, right? So, again, don't see any questions. Let's go ahead and wrap it up. Remember, we do this 7 p.m. Eastern, Tuesdays and Wednesdays. So we'll have some new topics for you next week. We appreciate everybody tuning in. Thank you, Jose. Great presentation. We'll see you next Tuesday, 7 p.m. Eastern, for the next episode of the Loan Officer Training Series with the Mortgage Calculator. Have a great night, everyone.
All right. Go team and requote those deals.
Yeah, absolutely.
Rates are dropping.
Thanks, everybody.